intent here, I believe, of Congress and of this administration is to keep people employed and keep paychecks rolling. So to the extent that, this protects airline compensation roughly at levels that we saw last year during 2Q and 3Q, obviously that's the objective. And for the carriers, Delta's disclosed it, and we think the cash burn is similar for American and United. These carriers are burning between $50 to $60 million per day in cash flow. So any assistance that they can get and to keep people employed, I think it's very fair. And if you look at the terms of it, only 30% needs to be repaid. It's a low-cost loan. And the warrants that are being issued here, which is roughly 3% of the total value of the program, really only become dilutive if you assume that stock prices double or triple from here. I don't think shareholders are going to be very upset about that.
So, if you look at some of these share prices, Brandon, anywhere down from 40 to 65% over the last 3 months. With this clarity around the relief, are these stocks investable, or is there still too much uncertainty as to the outlook for the reopening of the economy?
Well, the problem becomes, and I think Doug Parker was alluding to this earlier today on an earlier show, we don't know the duration of, when people are going to be comfortable, not even, being allowed to go back to flying, or when governments recommend, travel is safe again. But the whole psychology of the traveling public could be changed for quite some time. And then we need to think about, when do we get the things that we travel for, like conventions or, taking family to Disney World. We need to get those things back open before you can start to believe, hey, travel gets back to roughly 10, 20%, below the levels of 2019. If we can underwrite that scenario, then I agree. American, has a lot of debt here, but if you look at Delta, United, they manage their business with, about $10 to $15 billion less debt going into this than American. So you could arguably see a lot of equity appreciation there. For Southwest, they've always run a very conservative balance sheet. If anyone has liquidity to get through this, from an equity perspective, it's going to be them. But as you can see, the stock prices right there, Southwest has gone down the least. So I think, the one where we're concerned a little bit about, how fast things recover would really be American.
Brandon, if the terms are relatively generous, if the dilution isn't too severe, why didn't all of the airlines just take as much as they could possibly get their hands on, particularly given your point that we don't really know when demand will come back in any meaningful way?
Well, I think we have seen all the carriers take it, and it's our understanding that maybe Spirit Airlines wasn't included initially, but I think they're also working on this because, keep in mind, even if you're Gary Kelly of Southwest Airlines, CEO, he's looking at a situation where even though they didn't have that much debt going into this, they're burning through cash. We estimate probably $30 to $35 million a day. Even their liquidity profile is going to run out by the end of the year if nothing changes. So I think anyone in this industry is going to say, look, we're going to take the available cash and liquidity, especially if it's low cost, when we can. And I think what we're going to see also is a lot of the carriers not only take these cash grants, but now also apply for the loan program. Remember, that's about $25 billion in value. I think if we get that doled out to the industry here on similar terms, we'll see a little bit of equity dilution, but more importantly, this should give us liquidity to get us into 2021 for almost all these carriers. The question then becomes, what's the right level of travel demand?